Hello, everyone, and welcome to our Google Hangout on Air today. I'm Dominique Molina, President and Founder of the American Institute of Certified Tax Coaches, and this is CPA Business Breakthroughs. So glad you could join us. We've got a really good program planned for today. In the next hour, it's going to be really chock full of a lot of really good useful information in a quick period of time. So happy to introduce my guest for today, Ed Lloyd. Ed and I have been working together for many years, very successful CPA and certified tax coach from the East Coast, and he's coming to us live today. Ed, thanks so much for being here.
You're welcome, Dominique. It's a pleasure.
We are going to be covering some really good things, so let me just give you a preview and what to expect during our time together today. You know, Ed's done a really fantastic job of transforming his practice into a value-based premium fee billing firm, and we're going to be talking about how Ed walked through these strategies so that you can take away some useful tips that you can start implementing right now and do the same thing in your business. Ed's been really successful at taking the plunge and breaking the model, breaking away from the hourly based billing and the pay per form model and move more towards a value-based billing system. And so we'll be talking about that as well. Also here to join me today is Scott Solari for Get Viral Marketing, and Scott's going to be moderating for us today. Scott, hello.
Hello, how are you guys? Thanks for having me. And just so everyone knows, feel free to ask questions. I'll be jumping in and we'll get those answered for you, and Dominique will be answering those, and Ed as well. Thank you for having me.
Great, thanks, Scott. Can you tell everybody how they can submit a question? Some of our viewers are new to Google Plus and to the Google Plus community.
Yeah, so on the right, first of all, there's an application that says Q&A, and just click on that and it should pop up on your screen, and then there's a little chat box. Just type in your question and it will say your name and what you ask, and I'll be able to see it and we'll be able to answer it, and it'll notify you when it's being answered so you know that your question's getting answered next.
Great. Thanks so much.
Yeah.
So Ed, let's help us a little bit understand a little bit about your background. I've had some fun getting to know you over the last several years, but give us a little bit about yourself. What's your background? How long have you been in practice? Where are you located? And tell us your story. How did you get started in the CPA business?
Okay. Well, I've been doing this for over 30 years. I live in Charlotte, North Carolina. My dad's a CPA. So when I was growing up years and years ago, we would do returns at home for clients that he would work on, and I would do them by hand. It always intrigued me. And so when I went to college, I kind of followed his footsteps and majored in accounting and got my BS in accounting, and from that point went forward and got my CPA license.
So a lot like some of us and a lot of viewers out there too, it's in your blood. I can tell you the numbers seem to run in your heritage.
That's true, and the nice thing about the CPA work is all you have to be able to do is add, subtract, divide, and multiply, so you don't have to get into higher math.
Well, you know what, Ed, the good thing is that you don't even have to do that anymore, because we've got these computers and smartphones that can do tons of things. Unfortunately for me, it has meant a degradation of my math skills because I become dependent on them.
I would agree with that.
So, so your dad was in the business. Did you start working with your dad, or how did you get started on your own?
Well, my dad was he worked in industry, but he did some tax returns for some people as well. So he did some of that. So I didn't really get the public side from him so much. But while I was in college, I went and worked for a public accounting firm and did that during the summertime and during the year as well, to kind of get a feel for what I was doing, so that when I graduated, I'd have some experience, which of course made it a whole lot easier for me to get hired with somebody. I worked for a large regional firm and did a lot of travel for 6 years, which I really enjoyed, and I traveled throughout the United States. But being on a plane and working 80 hours a week on top of that got old pretty quick. So after 6 years, I decided it was time to venture out on my own and begin that process of starting up my own practice, and have built it up ever since.
Great. Well, so you're sharing that you got this foundation from working for somebody else. Tell us about what were some of the good things about that. You shared a little bit about enjoying the travel, although that can be taxing at times. But what were some of the positive things that you took away from that, aside from just getting your experience that prepared you to launch your own business?
Well, a lot of things that were interesting was I was in different places all the time. So I was traveling throughout the United States, so I'd see places that I typically would not have gone to, meet people I wouldn't have been able to meet, and understand how people kind of live and work in different parts of the United States and what their philosophies are, which a lot of them are much different than where they are in North Carolina. So from here to California is quite a big difference, and I did a lot of work in LA and did a lot of work in Miami and DC as well. So there's a lot of diversity in what I did and the people that I worked with as well. And the other thing that was nice is it was a larger firm, so they had a lot of systems in place. I'd be able to kind of get an understanding of how the hierarchy worked and how people, organizations that were multi-offices put things together. One thing that was different back then is from a tax return preparation standpoint, we didn't have the software on the desk. We had to fill out the information and run it to the FedEx, so we hit the FedEx box on time and get that off up to the DC area office so they could process it. The other thing that we did a lot of was audit work, and the death knell for audit work, in my opinion, was the fax machine, because that stopped the excuse from, well, I have to get the information from you to be able to process it. Well, all of a sudden you're able to get that in no time at all. So that gave the push that we normally would put into a job away.
Sure. Yeah, it's interesting to see how many tools we become so dependent on, yet those tools can become obsolete overnight. So if you think about the fax machine, we went to renew our fax number recently, and I was thinking, gosh, when was the last time we even used the fax? Do we need the fax? I don't know if it's a lost expense or what, but at one time we couldn't live without the fax machine. So it's interesting to see the transition there, and especially when you're working in a business where you've got to have that access to information. That's really critical to our own ability to be efficient in our business, is controlling how and when we can get access to data. It's so critical, and it can make or break the profitability of a project. So I imagine you saw pretty quickly your realizations begin to change on projects when you get information by fax.
Yeah, it definitely speeds up the process and helps you get things completed much quicker.
Well, so tell us a little bit about some of the bad things. I think it's easier sometimes when you work for somebody else to pick on the bad things, that the things that you absolutely, definitely will not do on your own when you have the chance to work in your own business and work for yourself. What were some of those things? You share with us the good things about learning about systems and the hierarchy, things like that. What were some of the bad things that you felt like you took away knowing you would not repeat those same mistakes, if you will?
Well, part of it is just from an organizational structure. When you have a large firm, you have politics and those types of things, and then you have people in a location apart from you that are basically deciding what's going to happen as far as your compensation and those types of things. So, I mean, that was a bad thing just because you work where you work. You don't really have a whole lot of choice with that, so you don't interact with those people. But I think it's just inherent in a larger system and not a whole lot that they can do about it. So that was probably one negative, but I can't really blame the firm for that because they have to be able to do those things.
Sure.
And I think a lot of the structure of the way that they had things structured just wasn't as efficient as it could be to get things out. A lot of times there were things back and forth, and I think people have seen this many times before. They were just to occupy time as opposed to actually getting anything done for the client. It wasn't really materially helping what we were doing. So probably a waste from that standpoint. And the other part, even though I sometimes I'm guilty of it, is the hours. I mean, I would work 80 hours a week, But on top of that, I'm traveling. So when you're doing that on top of an airplane, it makes it very difficult to try to have any semblance of a life at all for a good period of time. And the other thing that I won't do in my practice is anything to do with the yellow book. We used to do a lot of HUD audits back in the day, which you do a financial statement, then you do another financial statement on top of that financial statement. So that was something that I was really glad to get away from, not having to deal with any of that when I was on my own.
So you're saying, you know, being able to have the freedom to choose which types of projects that you're working on. Yet I see a big mistake sometimes with tax practitioners in their own business is that we start out that way. We have the best intentions of being able to choose only the projects that we like to work on. Did that happen for you too? Because maybe your sights were set pretty high when you left the bigger firm and started on your own, and there were things you swore you would never do in terms of certain projects you didn't like. Tell me about that transition when you on your own. Was there anything that you thought you wouldn't do that you kind of found yourself doing as well, even though it was your own business?
Well, and this is probably not uncommon, when you start on your own, you start with zero. So when you start with zero, you do what you got to do to survive. Part of what I did was I worked for my old firm. They subcontracted me out to help them out do things. I worked for a income tax preparation company. They had a legal company, and they had tax prep people with that. I worked with them, and then I built my own practice. So I had three things going on at the same time, and building my practice all along the way as I went through all of this. So do you do things that you probably wouldn't have wanted to do if you had a choice? Yes, but you know, you smile and you do the work for the clients, and you help define your practice as you grow on.
But tell us about your pricing in those early days when you were getting started, because you're starting out with zero clients, and a lot of people do find themselves as fortunate as you, Ed, where you can do a contracting situation for a bigger firm. But what about those early clients that were coming on to Ed Lloyd and Associates? How did you develop your pricing structure for those tax projects that were coming in?
Let's see, wing and a prayer is probably the way it was developed. I mean, you know, initially when you don't have many clients, you're worried if anybody ever says anything about your pricing. But then as you go through and you understand that there will always be somebody that says something about pricing, or if you don't, you must be just giving it away. So that's something that I encountered and just really didn't have a grasp on. When you go to school, nobody teaches you how to be a business owner. Nobody teaches you how to sell. You don't know how to sell when you're coming out of college. That's not a class they teach. So I did a lot of work on that on my own to build up those skills to be able to do those things, because you just don't get them otherwise.
That's great. I think you hit on a really important point, and that is looking at what things you lack that you need in this journey as entrepreneurs. And you identified a big one, and that's the ability to sell. And as much as we may not like it, to have a successful business, you do have to develop those sales skills. And you mentioned doing that on your own. What were some of those resources that you found to be really helpful as you were studying the sales process?
Well, I'm going to date myself a little bit. Back then we had the cassette tapes, so I would buy the cassettes on selling processes. There are numerous of them now. You can get on DVDs and whatever process that you want. But I would listen to those as I was going through and going to meet a new client or doing some marketing work or just driving around, and I would listen to those over and over to get a feel for it. And some people just can kind of develop in the sales thing and get comfortable with it, and some people can, and that's okay too, because you know, you want to work on your weaknesses, but if it's something that you just don't do very well, then maybe you need to hire that piece out. So that's something to look at and think about as well. I did one small acquisition when I was starting out, and that kind of helped build my base as well and get me more comfortable kind of being out on my own.
Yeah, that's a great point too, is the choice to build or to buy. And so you mentioned that you purchased another firm. What kind of firm did you purchase?
It was a really small tax practice, so it wasn't a tremendous amount of clients, but that did just give me a little bit more that I had to work with at the time.
Sure. So would you say that was a positive experience overall, Ed, when you went through the purchase process?
It was an interesting process. The client base was not probably what I want for my optimal client base, but it did help me to be able to build and grow. And I did get referrals off of those clients that I acquired from that individual.
Do you have a sense for how many people stuck around? That's always the big fear is, I'm going to spend all this money to buy this business, and a lot of the clients are going to leave when the old owner's no longer there. Do you have a sense for what that result was for you?
Well, this was 20 years ago, so those clients have they're not around anymore. But did it come out and work out okay for me for the time being? It definitely did. I mean, I didn't earn out, so I was just paying for what I collected, a percentage of that. So it was set up to where it couldn't be a loss for me. I couldn't lose.
What did you find in terms of that experience, Ed? We were talking a little bit about pricing and how do you establish your price, and they don't teach you how to price either in accounting school. And so a lot of us are looking to the marketplace. We have this idea that there's this going rate for work, and we want to come in somewhere around there. Not everybody's being comfortable being the most expensive in the marketplace. Not everybody's comfortable being the cheapest in the marketplace. What did that experience of acquiring another firm, did that change your view on pricing at all? What was the pricing structure like of the business that you acquired, and how did it compare to the pricing you were using at the time?
Well, unfortunately, it wasn't much of a learning experience because his prices were lower than mine. So I had to go through and educate those people and try to bring them up, which is probably part of the reason that after 20 years they're not my clients anymore. But it wasn't that large of a purchase anyway. But it was interesting looking at the pricing as far as what they did and what I was doing, and I had more conviction in what I was doing and the quality that I was delivering than I think that they had in their firm.
So it seems like early on then you started to realize that your own confidence in the value of the work that you're delivering was helpful for you in establishing higher fees. Would you say that's the case?
Yes, but I think with pricing, you always take 2 steps forward and 1 step back because you start to second guess yourself, and that's the process. But if you keep doing that every time, of course, you're going to go somewhere. But I think that's the part people have trouble with is just the confidence to move forward, and then the realities of economics to make sure that you're able to sustain yourself.
Sure. So how were you establishing pricing at that time? Was it kind of an hourly rate based on an estimate of how long it would take you? Did you have a fee structure of a per form charge? How were you doing things in the early days?
With all the accounting work and things that I did, it was in consulting work. It was by the hour, and the tax return, I use the hourly piece, but I usually just put a price on it based upon how complicated it was for the client.
Yeah, I think a lot of people use something similar. But of course, that's not without its own flaws too, as I'm sure you discovered in your journey, and that is that, as long as you're linking your value to the amount of time that you put into something, you're always going to be limited on your earnings potential because there's only so many hours in the day. And I think as you saw with your experience working for the larger firm, I think the typical approach to solve that problem that we see in the service industry is, well, you just bring on more help and you start to accumulate employees and bring in the staff. And that's supposed to be the answer to all of our problems. Tell us about when you first started making some hiring decisions in your business. And did that come with the business you acquired, or when did you start hiring people to help you out?
Well, as you know, hiring people brings on another set of problems, which goes without saying. But I didn't acquire any employees from the firm that I purchased. My first person that I hired was an administrative assistant because I was doing everything and had gotten enough business to where it just didn't make sense. The first hire was pretty scary because you have to make payroll. and you have to worry about not just you, but you're taking care of somebody else. And once you figure that one out, and it gets okay. It gets a little bit easier to hire the second one, and the one after that, and the one after that. But I think hiring the first person is probably the most scary thing that there is, for me anyway.
Yeah, I can relate to that too. Is the panic attacks in the middle of the night, wondering if we're going to make payroll, and like a close second for me was the idea of paying somebody but not having enough work. That was just a sickening feeling, and thinking, am I going to be able to keep this person busy? And it's costing me so much money. And those are the kind of thoughts and ideas that keep you up at night. Well, at some point, Ed, you had to realize that there was a different way of doing things in your business. And it sounds like for you it was a kind of a long process as you were learning these skills over the years. What would you say was a real pivotal moment? Did you have any key moments in your career life or even a personal life experience that caused you to look at things differently in your business?
Yes, I took a class, it was a boot camp in, I believe, '96, and it was for management consulting. And they were very much into fixed pricing and charging flat costs to your clients for the consulting work that you did, showing them the value that you're bringing to them to help their business grow, and delivering it and help measuring it. And Ron Baker was one of the speakers there. This was when he just first started out. He was a baby in the business at that time, and he spoke on that as well. So all of that was a good foundation block for me to come back and to establish consulting services and fixed fee arrangements for the clients at that point, and charging them for things that we do just per event, if you will, and then on a monthly basis as well.
Great. Yeah, I think you hit it right on the head, and that is, establishing the value of what we do. What are some of the things that you have discovered are the best ways to establish the value of what you do with clients?
Well, I think it depends on what you're doing. If you're doing consulting work for a client and you're trying to help grow their business, you need to be able to articulate, this is where you are, this is where with some help we can get to, and then these are the steps it's going to take, and this is the cost to get there. So when you get through and quantify that, the client can put their arms around that a whole lot better, and they're more in tune to being able to pay you. I mean, it's a good-sized cost because you're bringing a lot of value and adding a lot of work to that. And in addition to that, you have a lot of cost on your own to be able to deliver those services. From a tax standpoint, it's very similar. You have to look and see what you're delivering from a value standpoint, explain to them the processes it takes to get there, and how much it's going to cost for them, and what the value is going to be. And with the tax piece, I think it's a little bit easier because it's easier for them to understand the savings that they're getting. With the consulting part, it's sometimes they may just a little bit more explanation with the client for them to understand we're helping your business grow, which is, of course, very valuable as well.
Yeah, let's talk about that, the tax piece. I think sometimes it's hard for people to understand what the value is in the tax piece. Hard to describe what the value is of filing someone's 2013 1040, for example. But you hit on it when you said the planning piece of it, and I think that's a common area that gets overlooked a lot by practitioners is, what is it that I'm doing that actually adds value to this person, whether that's in the form of a bigger bank account or peace of mind. Peace of mind's a little harder to quantify, and it's an intangible benefit. But the savings part of it, I think, is that's one of the wonderful things about what we do, is that we have the opportunity here to calculate to the penny, exactly what we're worth to our clients. So you talked about this training that you went through back in '96, and you mentioned not only focusing on that value piece, but also tracking that value. So what are some of the tools that you've used to track that value? Let's focus on the tax planning side of it for a moment, and any kind of cool tools that are out there, applications, or is it an Excel spreadsheet that you use? How do you track that?
It's this wonderful program called Excel. Typically track. but we just go through and analyze for the client what we can do for them and how we can help them out and how they can save money. And part of what we do is some of the soft stuff as well that we're helping them out with. But to be able to track what their benefits are going to be so that they have an understanding of what they should be, what should happen by the end of the process when we're done.
Sure. I've actually seen your Excel spreadsheet. You've shared that with our community, and it is very simple but very, very powerful. Just to kind of give a brief example, one of the spreadsheets that you shared with me, had basically 4 or 5 ideas that you had brought and made a recommendation to your client. And next to each one of those ideas, you calculated an amount of what that would be worth either over the next year, the next 5 years to that person. And then a simple formula does the trick, and you add up a total in terms of what you were able to do together that year in terms of saving. Do with that information, because it's cool for us numbers geeks to know it. But the important piece of that, too, is how you communicate that to your clients, because they're not aware. And when we make the assumption that they know what we're worth to them, that could be a really costly mistake. So how do you communicate that to the people that you're working with?
Well, we'll go through and do the spreadsheet analysis, like you said, and help quantify what we're able to do. And then at the end of the year, we'll go through and I'll do an analysis, and I'll say, well, if we didn't do this, 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 and this, where would you be? So that they can, because it's pretty easy to make a change in the return and just put it back to where it would have been, so that they know what the benefit is from all the work because they have to do work and you have to do work. So it needs to be a benefit for everybody. And we'll make sure that they understand that the work that they put into it and the money that they put into it has helped deliver a good value for them.
Hey Ed, I hate to put you on the spot, but do you have any specific examples that you may can give the people that are watching? A little more detail about that.
As far as what we do?
Or no, as far as you have a specific example of how you worked with the client to show them this Excel sheet and go through that with them and communicate to them, and then they were able to get that result.
Well, it's really a list of processes. We start off with typically what I call a structure for a tax plan, and I look at it like a house. You need to have a foundation, and there are lots of things that you look at when you're looking at a foundation, and part of that is entity structure. Do I have the right entity? Do I need more entities? Do I need less entities? What changes do I need to make with that? Compensation. Am I overpaying compensation? Am I underpaying compensation? How does that all work from a taxation standpoint? There are audit risks for the client. They may be doing things that are going to cost them to have an audit, and they don't even know it. So we go through there and work on audit risks for them so they understand that they have to be compliant and what they need to do to be able to do that. What kind of dovetails with that is deductions. Are they documenting what they're doing correctly? A lot of clients don't document what they do to be able to have it stand up for the IRS, and we'll get through the processes and procedures, and every client's different on how you're supposed to document things so that when they have that deduction, they actually get to keep it. That's really important. And there are lots of other things that people, if you don't spend the time with them, don't know. Auto, rentals, there are just so many things that are out there that you have to kind of customize with the client and see what fits for this individual, because everybody is different. There's some similarities, but everybody's different, so we have to go through and see what their strengths are, what their weaknesses are, and identify them to them, and let them know what changes they need to make to, one, make them to where they're compliant with the IRS if they have issues with that, and then also to legally be able to save money on taxes.
Great explanation. At what point in the conversation are you having this discussion? Because there's some things that you can see before you go into a plan that indicate to you that they're a good candidate for a tax plan. How much of this communication, if you will, is happening on the front end before you meet with somebody versus how much of it is happening after, at the end of the tax plan? And I'd like for you to also to talk about what part of this conversation happens just every day, even when you're not working on a tax plan. Let's say you're doing a compliance filing and and you're filing a tax return, what parts of these conversations are happening in each phase of the project?
Well, I'll hit the last one first. When you have a compliance issue, a lot of times we'll communicate that on the phone with the client and let them know what's going on. I'll typically add that to a transmittal letter, put it in bold. This is a problem, because I know that I've told them, typically I've told it to them before, but I'll make sure that it's there again, and we'll highlight it so that they see it and know that they have to act upon it. Because a lot of these things are very, very important. We had the return that we reviewed this week, and we've been being on this client for years, and he's actually able for domestic production deduction, but he has two different phases going through his business. One of them qualifies, one of them doesn't. He has no record of anything for us to be able to simulate that information from. So to do that deduction, we would literally have to go back and redo his accounting for the entire year, because of the way he's organized his records. And this has been communicated since we took him on. So we're going to look at it and see, well, does it make sense for us to come back and redo the accounting? Because I think the deduction is going to be great enough to where it's going to make sense for us to do that. Plus, then he's got a documented file, which he doesn't really have at this point.
Really great example that you brought up, too, about the domestic production activities deduction. And there's a lot of bookkeeping that goes into that, which is difficult sometimes to show the value in doing that compliance type work. So tell us about how that conversation was when you're explaining why this needs to be done and focusing on the value versus the why. What was that conversation like? And if you can remember, what were some of the numbers involved? Do you remember what the savings amount was as a result of being able to take that bonus deduction?
Well, that I don't know yet, because we just uncovered it this week. So he's coming in later this week to have a communication about the differences and what we need to be able to do to make that happen for him, and make sure that, give him an estimate of where I think it's going to be, to be able to see that it makes sense to go forward.
Sure. So what you're saying, Ed, is you would then have an estimate for him of the benefit. So client, here's what you're looking at being able to save, here's what it's going to cost you, so that they can clearly see the value in the work that you're doing. Do you take a similar style?
I do, because before you do the work, in my mind, one, you got to be able to justify a cost to the client so that they're in a win situation. And then before a client undertakes something, that's more work for them as well, so it needs to be a benefit for what they have to do on their side also. So everybody needs to come away, doing very well in the transaction.
Very, very important point. So I just want to re-emphasize this one more time. I think the typical approach of the accounting industry might be something similar to this, where you say, Mr. or Mrs. Client, there's some deductions that you can take on your tax return, but I'm really concerned about the quality of your records. We don't have the kind of information that we'd like to see to be able to report this for you on your taxes. It's going to take us, 40, 50 hours worth of work. Here's what our hourly rate is, so here's what you're looking at the charge, and we'll go ahead and call you when we need to get more information. That's a typical approach, but what you're doing instead, Ed, is you're talking about focusing that attention on what does the client actually get out of this. It's not that they just come out with some good records at the end of it, but you're able to quantify that so that they can make an educated decision on where they want to invest their money, and helping them to come to that understanding of the costs involved compared to the benefit. And that's a very distinct difference that I want to help our viewers focus on, because that makes the difference between your ability to charge premium fees versus a standard hourly rate, is your ability to quantify that value. So if you could take us through just one more time, even though I know it's a little bit repetitive, but I think this is an important skill that you've learned in your career, is to be able to focus that benefit. So share with us one more time how that conversation might go this week with your client.
Well, if we identify that there are some tax savings for a client, and typically a lot of our new clients coming in, then we'll go through and gather information from the client and get an understanding of the base of what their business is, where they're going to be this year, and a basic understanding of their operations. From there, we'll go through and do an analysis and determine how much money is being wasted and what we can do to save them. So after we're through with that piece, we'll present it to the client so that they have a clear understanding. This is what we anticipate the deductions to be. This is what we anticipate the savings to be. This is the cost for us to do this. And these are the other issues that you have as well, so that they know what's going to happen for them up front. You don't want to get in a situation to where you're telling them they just don't know, because they can't make a decision if they don't know.
Absolutely. Really, really important point. Thanks for sharing that with us. And I know that you've been able to use that to really change your fee structure around quite a bit. Can you share some experience with our viewers? Because I know one fear that we all have, and we seem to share this fear in the accounting community, is that we're fearful of charging more for our work and really getting paid what we're worth. So take us back to a time, Ed, when you were thinking about quoting maybe even the highest fee you've ever quoted at one time, or it seemed like it at the time to you. Were you nervous? And tell us about what you were experiencing at the time.
I was very nervous because I hadn't done it before. So the first time you're going through a change in the way you're doing things always makes you second guess yourself. And then I sat down and just put it in kind of simple terms. I said, well, what is the gain for the client? What's happening here? If I go through and do this analysis, and this is the fee that I charge, and it's a very fair fee for what I was doing, what is the return for the client? Does it make sense for them? And the one that I was working on, that was giving me, I was questioning myself, their return was over 200% in the first year. Well, when I analyzed that, it all of a sudden made it pretty easy to be able to say, well, if they did 200% this year and then there's no fee next year, and this is a recurring benefit for them, this is a slam dunk for the client, and they're going to be very, very happy with this. So I was able to go through that example and present it to the client. They were satisfied with that.
That's great. I think that's a really important point as well, in what you said to yourself to get you through that fearful time in your career, and that was to look at it from the client's point of view. And the thing is that, you know, we're in a position of being a trusted advisor by our clients. They come to us for important financial decisions, yet for some reason we don't always consider that the same when we're placed in a position where we're going to be fee quoting something or putting a proposal out there, or even standing behind our fees, you know, if our fees are getting questioned, for example. But I love that you took that from the client's point of view, and hey, if they were coming to me with an investment decision from somebody that's not me, does this make financial sense for the client? And to get a 200% return in the first year and no recurring fees after that, but continued savings year after year, it's a no-brainer for the client, and you use that to really carry you through that experience. So good for you. What is doing that? How has that changed your business in being able to look at it that way?
Well, it allows us to be able to have additional resources to be able to do more things for our clients, which lets us be able to help more clients out and be able to articulate that to them, I think, in a better way. It's a lot of work to go through and do this process, but if you're able to deliver the value for the client, then it's a win for everybody, which is the way that it's supposed to be.
Yeah, let's talk about that for a moment, and that is, you know, continually finding ways that you can add value. It's a tough market out there in terms of staying on top of the changes in the tax code. I mean, there's never been a more tumultuous time in terms of changing tax laws than there are right now, and that means really staying on top of your A game. Would you say that that's one of the key successes for you is really staying on top of changing strategies and always having new ways of bringing about tax savings for your clients?
I would definitely say so, because as we all know, everything changes on a daily basis as far as what the tax code goes. So there are always new things that are available, and old things or things that have been around that just don't work anymore. So you have to be in tune with what's allowed and not allowed, and make sure that you're staying in compliance with the IRS.
Yeah, absolutely. And this stuff isn't easy. It's there's more words than the Bible, and there's been more cases going back and forth challenging the definition of some of these laws that it makes it very hard to take something that seems to be so black and white, but apply your client's unique circumstances to that situation and know that you're interpreting it the right way and applying it the right way. And one of the things that we're very proud of here at Certified Tax Coach is creating a community where you really can collaborate on individual cases. You can connect with other tax planners so that this is the law that I'm thinking about using, this is the approach that I'm thinking about doing, here's why it will be good for my client because it'll save them $100,000 this year, but I'm not sure pieces A and B fit. What do you think? And getting that feedback, I think, has been so huge in terms of not only building up your own skills, but giving you that confidence, learning more from your peers in terms of others' experiences. And I know you've had some opportunities to collaborate and work on some joint projects. Tell us a little bit about that. What was the experience like for you, and is that something that you feel like you get a lot out of as well for your own practice?
It was a very interesting experience to be able to work with other tax professionals on a client that's not mine. We were able to collaborate and work together and find some ways to be able to help this client out. And everybody has expertise in different areas, so you're able to build on everybody else's strengths and to give your strengths as well, so that as a group, and there was 3 of us, be able to deliver even more value to the client than I think any one of us would have been able to do on our own on an individual basis. And then the support of the CTC from a forum standpoint is very nice as well, because it gives you additional information and resources to help build your knowledge.
Yeah, absolutely. I think you brought up an idea for me that I think a lot of people have, and that is also another fear-based idea, that maybe you're too nervous to even suggest to a client that you don't have all the answers or that you're going to be seeking out additional advice. Did that come up in this case for you at all? Is that something that you've experienced in the past where you weren't sure what the reaction of the person might be if you told them you were working with another professional?
Well, I mean, nobody knows the whole tax code. You went through and told us how big it is earlier. So there's no way that everybody knows everything. And I think clients are very aware of the fact that there's no way everybody knows everything. And if you're not doing research and it's something other than rudimentary, you may not be doing adequate work for your client to customize what you're doing to work for them. So I think that they expect that for most things you're going to need to work on it, and it's not going to just be an instant decision.
Yeah, and I love too that you just put it out there. People understand that you don't have all of the answers, and I think that's an illusion. It's a story that we tell ourselves as practitioners that we're going to look stupid if we don't have all the answers. But when you think about it, that's not really the expectation that people have of us anyway. And I think it's a plus when you're able to be connected with a community of this nature and be able to offer that as a benefit to your clients, to say, hey, I'm not out here fending for myself. And your story tells a lot about that, Ed. Your experience coming from a large firm that had the infrastructure in place, that had the systems, that had the tools and the resources so that you could get the answer when you need it. And that's something that we lose in time as we venture out onto our own as solo practitioners. And so being able to tap into that resource, being a part of something that's bigger than any one of us, I think is a benefit. And I've found it to be particularly attractive to my clients when I'm able to let them know that. They understand I'm not an expert in anything, in everything rather, but being able to have that resource to turn to say, hey, I've had somebody who's been audited on this 10 times that can walk us through that process and tell us what the service is looking for so that we know we're doing the right thing, and you know as my client that your back is covered. Well, Scott, I'd like to break in here as we're winding down on our time and just see if there's any questions coming in from the audience that Ed or I can answer during our time together. And we'll answer a few questions before we say goodbye and tell people where they can find out more information.
Yeah, so there's no questions anyone's posted, but I got a question for, I mean, you both can kind of speak to this. I mean, sitting back here and listening to you throughout this Hangout, I really see the underlying theme of how important it is at taking a proactive approach with your clients and not sitting back and being reactive, to where you can really add so much more value by going out and doing the research ahead of time and really figuring out those numbers. Speak to that a little bit and how important that is when you're charging a bigger fee and you're going to the client and adding so much more value for them.
Sure. Ed, do you have a story that you can share? I've got a couple stories that come to mind on this topic.
I mean, some of them are rather, it's interesting. Some of them are rather easy, and some of them are not quite as easy as far as the things you're able to deliver. A lot of the times it's a structure standpoint that they're not doing things right from an entity standpoint. That's easy to quantify and extrapolate out for the client so you can see what's going on with that. I've gotten instances where people have been under the wrong basis of accounting, and they were able to switch, and going through and doing things like that saved them a substantial amount of money that they never knew that was there. And you can just look at their balance sheet and say, well, you've got an asset that's sitting there that should be belonging to you and not to the IRS. So you go through the procedures and the things with that as well, and there are just so many numerous deductions you can just kind of line up that people just don't know about. Which is expected, and you're able to come in and be able to put a plan together for them and make it happen for them.
Yeah, I think you said that perfectly, Ed, and it goes back to your point, Scott, of the proactive versus the reactive. So, Ed, I think you're taking it for granted a little bit that you do this so well, and not everybody does this as well as you. You're looking at a balance sheet and you're immediately seeing an opportunity to do something a little bit different that's going to add value for the client. Whereas a lot of practitioners will look at the balance sheet and take the numbers and plug them in on the Schedule L on the tax return and call it a day. So I think, Scott, you really hit it. It's that difference in perspective. And when we look at what Ed's doing so well, it's how he sees things. So when you enter that relationship, I think this has kind of been the theme for our call today, Ed, is all these stories that you shared with us today, is that when you enter a situation, you're seeing something that most practitioners don't see, and it has to do with the fact that you are seeing it with a different set of eyes, if you will. And so when you sit down with someone for the first time, or even if it's a client that you've had for a long time, it's what I've picked up from you during this conversation is, looking at their situation and saying, what more? Like, what else? What else can I do? What more can be done here? And when you look at things with that set of eyes, with that perspective, things just show up. You start to see things. And that really creates a very long-lasting, loyal relationship with your clients. Let me tell you a little story, if I can, just about this proactive versus reactive. Met with a longtime client recently who I had transitioned to another CPA in the area years ago. after she and I developed a friendship, and so the ethics kind of got a little screwy there, and so I referred her on so that we could develop this really incredible friendship that we've had for many years. And she did a really complex 1031 exchange in the last year and didn't have a lot of confidence coming out of her existing relationship, and so she said, will you just take a peek at this and let me know if what you think, if you think it was done properly. And so I took a look at it, and it looked like there was actually a mistake on her filing for reporting the 1031, and she wasted about $15,000 or so that she didn't have to pay on taxes because of this error. And so I said, gosh, the bad news is it looks like there was a little bit of a mistake here. Good news is you can always file an amended return and you can get it back. And then I was faced with a decision. She wants me to do the work, and the question is, what do you charge for a project of this nature, knowing that you're going to save someone and get them back $15,000? What is that worth to this client? Well, it's worth $15,000 to her. That's what size of check she's going to get back from the IRS and state combined. And, what does it cost? What's the going rate, so-called, for an amended 1040? I don't know, $750 to $2,000, depending. But for that type of work, that's a $7,000 fee for me. And people might think that I'm crazy. Heck, there might be taxpayers out there that think that I'm crazy to charge $7,000 for a simple amended 1040. But the result is still the same for the client. The result is that there's a positive return on investment there. And that's what makes the difference between someone selecting an advisor that's only going to charge them $750 or $1,000 for that amended return versus sending somebody, choosing somebody that's going to charge this exorbitant amount of $7,000. And they're glad to do it because they understand the value that comes out of that. So, Ed, if that's one thing that I think we take away from our conversation with you today is, focusing first of all on your skills to be able to have that perspective of being proactive, to identify those areas that you can bring more value, and then not being afraid to get paid what you're worth also, because in the end, it's still a really smart choice for your clients. And being able to communicate that, I think, makes all the difference. So I really appreciate your time today. I think you've done a wonderful job telling us, some of the things that have worked really well for you in your business. And I know that you've had some really great successes outside of work as well. Tell us a little bit about your family and what you like to do for fun outside of work.
Well, I'm married and I have 2 children and a stepson, and we enjoy playing music a lot. So that's a big focus for us. My son plays drums and my daughter plays guitar and sings, and we do a lot of that together. And that's maybe where some of the tax creativity comes in for me, just because that's just my nature from a creativity standpoint, and I enjoy that part. I guess it's a challenge for me to be able to go through that process, and something that I enjoy to be able to do.
That's awesome. And I know that because you run the practice the way that you do, Ed, it gives you that freedom and the ability to spend time with your kids and to do some of the things that you love on the musical side. And that's such an inspiration to me and to a lot of CPAs across the country. And so I thank you for your example there and showing us how it's done.
Well, I'm glad to be part of this today, Dominique. Thank you so much for having me.
Scott, do we have any other questions we might wrap up with today?
We don't, and I think maybe just tell the viewers that are on still, what to do next. If they are looking to learn more about this type of approach and learning these strategies, what should they do?
Yeah, good question. And I think, Ed, you emphasize this a lot too, is continually being able to have ideas to bring to people. That's where the education piece of this is so critical. So I highly recommend everybody who's viewing today or viewing this as a recording later, focus on your education. Focus on what strategy ideas you can learn that gives you these tools so that you can do exactly what Ed's doing in his practice. One really great resource, and of course I'm biased, is American Institute of Certified Tax Coaches. Our Tax Planning Academy is a great place to get started. We actually have an academy starting here in just 2 weeks. You're welcome to go to our website, certifiedtaxcoach.org, and you can click on Become a Certified Tax Coach to find out more about that. But whatever you do, I really encourage you to be proactive, to look for those ways that you can add value to your relationships with your clients and get paid what you're worth. Don't be afraid to charge what you need to compensate you for this value that you're bringing. It will change the way that you do business. And Ed, I know we can see that in your practice as well. So Ed, I thank you so much for being here today. Scott, thank you as well for your time. And
you're welcome.
Thanks to all of you at home joining us. I hope you've enjoyed our time together today. And we look forward to seeing you next month on CPA Business Breakthroughs. Thanks, everybody.